Today, let's seriously talk about A-shares, which is a market that most people can get in touch with. But it is still a market that many people are unfamiliar with and can't see through. In the eyes of experts and scholars, A-shares will always have a bright future, especially since the beating. In September last year, various favorable policies continued, as if they were telling investors, come on, come and play. But if you really break in and play, especially when the 11 holiday is over, you may all be hurt. Why did you start the defense battle again? When people participate in stock investment, they must be rushing to make money, but sometimes the winning rate is too low, and it turns into donations. As a senior financial practitioner and the experience of the previous 2 rounds of bull markets, many more mature stock market investors, after my observation of many investors, I will find that in fact, many people don't understand the market at all when they enter the market, and even some people don't understand the trading rules, and they can't even understand the K-line. How can they win the battle if they don't know themselves or the enemy? What about making money? So today, I would like to share with you, as an experienced person, my personal views on China's stock market. After reading it, it is not too late for you to decide whether to invest in the stock market. But before I start the introduction, I need to talk to you first. Let me emphasize that the view of the stock market is a very subjective matter. My views definitely have certain personal limitations, so this video is mainly about experience sharing, not a standard answer. Don't rely on me. If you have other ideas or opinions, then welcome friendly discussions and let's work together. Progress together. First, we need to know what the significance of the existence of A-shares is. To talk about this question, we must first talk about why the company issues shares and why it wants to go public. We all know that if you want to become bigger and stronger quickly, you will inevitably have to make a lot of financing in the early stage, so as to recruit more employees and open more branches. However, we may all have heard a saying that the step is too big, and it is easy to get into eggs. Maybe we have all heard of debt repayment. First, if the startup capital is borrowed from the bank, in case of poor management, it will lead to debt default, and then we can only sell the assets and declare bankruptcy. However, if the debt is exchanged for shares, it will be the risk of buying another one. In other words, the money owed to the bank needs to be repaid, but the money owed to shareholders does not need to be repaid. Of course, if the shares held by good shareholders who operate in the future will have a higher valuation, it is possible to get dividends from the operators in the future. However, no matter how good the story is, no matter how good the track is, the final operating results are, it is full of uncertainty. Early investors will also worry that the money invested in the operators will be lost a little bit, and finally they will lose everything. Therefore, early shareholders will look for the next round of investors together in order to make profits and share risks. Once the company's IPO is successful, it will face more investors. Although the initial investors can leave the market after the life limit is lifted, if the stock price can be raised again at this time. That will naturally lead to higher returns. Generally speaking, major shareholders all hope to make the company's performance bigger and stronger. If it is really not that big or strong, they must at least tell the story well or report the financial report. Do it well. Having said that, I want to ask you a question. At this stage, is the significance of the existence of A-shares a financing channel for listed companies or a fortune channel for shareholders? When I mentioned this part of the content before, in fact, not only A-shares, but also markets in other countries and regions have the same logic. So it is not enough to answer the question just now. Then let's go on. That is, what is the significance of the financial market to China's economic development at this stage? I wonder if friends who have speculated in grain have ever had such a mental journey. Once you make a lot of money through stocks for a certain period of time, or it goes smoothly for a certain period of time, do you think it's interesting to go to work? It's not as realistic as the fact that I make money by trading stocks. Then this state is put on enterprises, that is, getting rid of reality and virtual. At present, China is a country dominated by industrial manufacturing, and it is still experiencing the so-called industrial upgrading. In this context, the increase of R&D costs will lead to a gradual decline in profits. At this time, we must prevent the profit growth rate of the financial industry from being higher than that of the secondary industry. That is to say, if all manufacturing enterprises are engaged in investment and finance, who will be responsible for R&D and production? And my country's A-share market is an obvious policy market, so all economic policy trading rules can actually be planned and formulated around the real economy. Then, to give an obvious example, in the A-share market rules, the conditions for major shareholders to reduce their shares are relatively loose, because for company entrants, only by reducing their holdings will there be sufficient funds for industrial upgrading. while for investment institutions, only by reducing their holdings and cashing out their funds can they enter the next round of primary market. This reflects the attribute of the financial market serving the real economy. Of course, people are definitely unwilling to obviously support major shareholders to reduce their investment in the secondary market. Isn't this obviously coming to the stock market to circle money? Therefore, various new regulations were introduced to control this reduction. But rules are meant to be broken. As long as major shareholders want to persist, they have plenty of ways to diversify their shareholdings and ultimately leave the market quietly. Then, in such a market environment, many investors will no longer pursue the benefits of growing with the company. Instead, they played a game of taking the reduction of holdings as the ultimate goal. Looking at this set of ideas, why is there T+1? Why is there a restriction on shorting? Why do you shout the slogan of shifting from the financing market to the investment market? Why slow flow? Then we will find a reasonable examination. So what? There may be an answer to the previous question, that is, I think the essence of the A-share market is more the financing channel of enterprises. Of course, this is just my personal opinion. I wonder if you agree with it. In addition, in the statement just now, there is also an important role in the middle. That is, participating in the investment of A-shares. If people say that the A-share market is an out-and-out financing market, then coming to invest is tantamount to coming to donate money. Then there is definitely no way to attract investors, so there must be a mechanism to make money in the Alki market. Then, if the stock market is compared to a cake, then if you eat more, I will eat less. This is a zero game. If someone makes money in the stock market, someone must be losing money behind it. The plate for the cake is limited, and even if the cake is made bigger, there is a certain limit. Then at this time, you may eat a little more than the later. As for this, it is the same as what is often said in Circle B. In short, the stock market itself will not create wealth, but it is just a porter of wealth distribution. Then through the public information of Shanghai Stock Exchange, we will find that in our A-share market, the proportion of natural person investors below 500,000 yuan is 80%, while professional institutions and general corporate investors account for less than 3%. But it's only 5.22%. As I told you in my previous video, there are 3 magic weapons to thrive in the Tier 2 market. The first is sufficient chips, that is, the amount of funds. At least at this point, retail investors have completely lost. The so-called inside information 1.0 that reaches the ears of retail investors is usually 2.0 or even 3.0, which is far behind. Adhering to discipline may be the easiest thing to achieve, but there are still many people who can't do it at all. So, in this dual arena, there are a group of unarmed retail investors and a few heavily armed institutions. The elites want to grab food from them, and the final result is self-evident. If this is the case, are retail investors really unable to make money in the stock market? Of course not. Can you make money in the stock market? Of course you can. In fact, even if we steal the leader and choose stocks on the second day, there are only 2 results to make or lose money. But what I want to tell you is that even if we can really achieve a 50% winning rate like tossing a coin, the possibility of final profit is very small. In a familiar saying, assets only need to fall by 50%, but if you want to get back your capital, you have to make another 100% profit. It can be seen that doubling assets is more difficult to achieve. Accounting for 99% of the number of investors, but only 10% of them are really profitable. If making money in the stock market is also a professional skill, then if you want to make a profit, your professional level must exceed more than 90% of the talents. So, at this point, the following words may be a bit offensive. I would like to ask these retail investors with great ambitions, is there any skill that can surpass more than 90% of the people in your life? Your college entrance examination results? Your work skills or hobbies such as piano, chess, calligraphy, and painting? If not, if you want to outperform more than 90% of people in stock trading, who gave you your confidence and courage? I remember a joke saying that if the stock market can really make money, I'm afraid you have to even open an account, so people really must be self-aware. Otherwise, they will easily pay the price for their own cognition. But as for this, everyone, there is no need to be overly anxious, because the cognitive level of the majority of A-share retail investors is generally not high. Through my observation, Many investors are not even very clear about the trading rules. If you can understand the trading rules and learn more about the normal correlation impact of economic data on the stock market, I think you can at least exceed half of the investors. Then, if you master a little more skills like mastering human nature and being good at detecting the psychological state of most retail investors, your investment ability can even go further. Some time ago, I saw such a picture in the stock group, saying that young people should not worry too much about losses, but I personally agree with this view, so it is still very helpful for us to accumulate investment experience. But at least it can effectively improve your correct probability, so even if you lose money, you can make us pay clearly. After examining ourselves, let's examine the characteristics of A-shares. The reason why they are characteristic is that A-shares are really unique. People often compare Big A with the United States, Japan and Europe, and even with the Indian stock market. If you ask me to say, this is not comparable at all. First of all, the first point is that A-shares are not the economic friendship table we often hear at all. Even if the real economy rises, there is a reason for black stocks, and if the macroeconomy goes down, A-shares will fall with a high probability. The 2A share is the only securities market in the world dominated by state-owned enterprises. The weight of state-owned enterprises in A-shares is quite large, so the rise and fall of these stocks often violates the market mechanism. In other words, the better you learn book knowledge, the easier it is to doubt yourself in A-shares. Is what you have learned false? Textbook no. 3. China's stock market has quite a lot of corporate benefits, which are very low. They can't make money for short. What about these? We can actually see it in the financial report. However, I am convinced that there should be very few retail investors who take the initiative to read the company's financial reports. Because the benefits of these companies are very poor, they are unwilling to pay dividends and can't divide dividends. Therefore, the important factor of company dividends is often ignored by A-share investors. So everyone is hoping to make money by making price differences, so value investment is difficult to work in A-shares. The opposite speculative atmosphere is particularly strong in A-shares. This can't provide a division of labor strategy for some big funds to enter the market. That's precisely because the security of big funds entering the market is poor, A-shares. The mayor's speculative atmosphere is very strong, so it is the best choice for these big funds to keep warm. In addition, A-shares have no legal market maker system for a long time. Even though they have been cleaned up at present, the rampant situation of dealers has not been broken. Except for the lack of short-selling mechanism, A-shares do not have a perfect delisting mechanism. Information disclosure is opaque, and even companies with financial fraud will be left in this market. The issuance of new shares is one of the largest and fastest markets in the world. I won't elaborate on it due to space reasons, such as the characteristics of foreign exchange control equity branches. However, when it comes to this, everyone has been able to find these characteristics. In fact, they are all carried out in the financing market around the core point I mentioned to you at the beginning. So A-shares have such trading rules, regulatory regulations, and policies. That is the logical core and reasonable. Despite the above characteristics, A-shares are not without merits. It can only be said that if you want to make money in them, you must follow the above logic. Since it's all here, I will briefly share some of my personal investment experience with you today. First, if you can get the investment decisions of the dealers in time, buy F in advance, or maintain a high synchronization rate with it, it will naturally greatly improve your investment winning rate, but most people will definitely not be able to achieve this situation, so we will retire. That is to say, we try our best not to maintain a high synchronization rate with the vast majority of shareholders, especially new shareholders, because A-shares are a financing market, and these new monuments usually become fuel. Second point, due to the government's strong intervention in the market. So, in the stock selection stage, the first thing we must pay attention to is the implementation hotspots, followed by the mainstream themes, supplemented by the market sentiment mentioned earlier. the turnover rate of stock price increases again, and the last thing we look at the company's performance. And try to grasp the strong and release the weak as much as possible. This logic of grasping the strong and releasing the weak is equally valid in the US stock market. Third, if you plan to hold shares for a short time, it is recommended not to have unnecessary feelings with the stocks you hold. A ruthless speculative machine moves quickly, accurately, and ruthlessly. Unnecessary feelings will only affect the speed at which you draw your knife, and you must set your expected win only and stop loss positions before you are ready to buy it. Once your set conditions are triggered, or it is less than expected for more than 2 trading days, then try your best to make a move, because time is the biggest opportunity for funds and costs follow the trend. For large funds, the phenomenon of grouping is not what they negotiated offline, but more of a tacit understanding between each other, which will lead to a strong upward trend in a certain stock, and the reason for the decline is the same. Then, being good at leveraging trends is always more effective than your own wishful thinking. In many cases, new retail investors are often afraid to start because of the high price, resulting in big workers being more willing to take over in the downward trend, and then being quickly stuck because there is no stop-loss expectation. The risks of the 5 stock markets are always placed first, and you must never use all your net worth to stop trading. In view of this characteristic of the financing market, we must know that retail investors must respect fashion when making money compared with making profits from the tiger's mouth. I suggest that retail investors must treat stock investment with a mentality of entering a casino because most people still know that 9 blocks will lose. Only in this way can we control risks from the source, but most people think that they are investing, but they don't know that they are gambling. If they blindly add a lever, they are very likely to lose everything. And even if the assets invested in the stock market are only part of your total assets, so I do not recommend you to fill your position easily because it will often put you in a very passive state. 6th, don't invest in doubt and blindness. Many retail investors often hear about some stocks or opportunities, but they don't know anything about this stock, and they don't even know what the main business of the company is. Then, even this stock may have a better trend in the future. It is difficult for retail investors to make money on it. In addition, before you are fully sure, try to wait and see or conduct simulated trading as much as possible. Don't think simulated trading is useless. Even if we don't generate any profit, we should use this to maintain a kind of concern for the capital market. I am more sensitive to the market. While other retail investors are still watching the policy interpretation, I have already predicted the decision. Well, there is actually quite a lot to say, but today's video is definitely not finished. So I will add another one that I personally think is more important. That is, try not to touch the stocks that the company's shareholders have significantly reduced their holdings. What is the reason? Having said so much before, there shouldn't be any need to explain the end. Although we have to be in awe of the market, many times, the investment logic of A-shares is more inclined to the returns brought by investment in Boscia. It is real money, or it may be an experience, or experience. If we can often summarize the experience at the right time and review the causes of mistakes, it will gradually surpass most retail investors after going back and forth. You must know that most retail investors are actually unwilling to spend too much time and energy on the stock market. More often, it's because people around me are jealous of making money, and these people who blindly join the WTO are the biggest contributors to the market. To tell the truth, I sincerely hope that everyone can make money through investment. I am indeed a beneficiary of stock market investment myself. Sometimes, I always naively hope to share some of my experiences with you. But I do know that more often this is a laborious behavior or a sentence from the audience is just his luck. How have I felt over the past few years? Making money in the stock market does require luck, but how to make better use of our luck is also a technical job, and the topic of stock market investment may be relatively tired, and not many people may want to read it. So if you have all seen it here, and I think there is still some truth in what I said, if you are interested, you can translate it forward. Of course, it would be better to leave a free like. After reading my content, many new investors around me think that these contents are more or less helpful. At least, it can calm their minds. It can broaden your horizons so that you can be more in awe of the market. Then if these videos receive a good response unexpectedly, I will continue to stick to it and share more experiences with you. After all, this is my professional field. I am still very confident, so thank you all for watching. I am President Liao, a financial blogger who hopes everyone can make money, so I'll see you next time.